Wonder why your business keeps growing, but your profits don't? Well, you're not alone. So many entrepreneurs unknowingly build profit leaks right into their company's foundation. Hidden costs, overbuild systems, unnecessary expenses that quietly eat away at your margins until there's nothing left to reinvest or reward yourself. But what if you could catch those leaks early? Build out a lean, efficient company that scales faster, innovates more, and stays competitive no matter the market. Well, that's exactly what we're unpacking today with Duane Deason, the founder of the Efficacy Group and the author of Operationally Svelte. Duane spent over 2 decades helping businesses tighten operations and strengthen profit. So if you're ready to find out where your money's slipping away and how to plug those leaks for good, well, watch today's Profit with a Plan podcast. Hey, entrepreneurs, are you working too hard for too little profit? Well, welcome to Profit with a Plan podcast, where we help you scale smarter, increase profitability, and build a business that's worth more, whether you keep it or sell it. I'm Marcia, Riner, business growth strategist and the profit booster behind Infinite Profit. I've helped countless entrepreneurs to turn their businesses into highly profitable and sale-ready assets, so they enjoy more income now and a bigger payday later on. So join me for practical strategies and expert insights and proven steps to help make your business be more profitable, more valuable, and built to last. Today's episode is sponsored by Infinite Profit, where we don't just talk profit, we deliver it. But before we dive in, I've got something special for you. If you're tired of flat revenue or marketing that just doesn't seem to be paying off, well, the new Profit Booster Growth Map might be for you. In just a few minutes, it shows you exactly how to bring in more qualified clients and plug those profit leaks that are eating your cash. So get your profit growth map at profitbooster.biz and get started on turning those missed revenue opportunities into real money. All right, let's dive into today's episode. My guest today knows exactly what it takes to keep a company lean, profitable, and built to last. Duane Deason has spent more than 25 years helping organizations manage, cost, and operate efficiently. From stabilizing a public company on the brink of bankruptcy to founding the Efficacy Group, where he advises leaders on building strong financial foundations. He's a certified public accountant who holds an MBA from Georgetown University and is the author of Operationally Svelte, Manage Costs to Increase Profits and Enhance Performance. Duane brings practical CFO-level perspective on what really drives sustainable growth and why managing costs early is the smartest investment any business can make. Welcome, Duane. Welcome to the show. Appreciate you being here.
Thank you for having me.
Awesome. Okay, so I always like to ask how people got started and where they are, and just to kind of get a little piece on it from you. But you've got quite an array of mix mash that actually work perfectly together. CPA, CFO. You've written a book. Where did all this kind of come out of you?
So before in the 90s, I was helping companies during the dot-com boom, and they were all going through transactions and doing really well. A lot of startups and early stage companies, and I was having a ball with that. And I sold that company, and I started as a CFO of a public company that had done an IPO, and this was after the dot-com bust, and they were burning cash really quickly. And they probably had less than a year to live or
Oh my
survive
gosh.
and before bankruptcy. And so I helped rationalize that business, and I really enjoyed that. It was a very different feeling than I had when I had helped at even IPOs and a lot of other exciting type of work, because I felt like I had saved employee jobs, that I had made a difference, and we were able to get a graceful exit out of that company, and would instead avoided what would have been bankruptcy. And so ever since
Wow.
then, I really decided I want to dedicate my career to helping companies manage costs and not get into that situation. And so I've done that, and I've really enjoyed my career. And just more recently, I decided I wanted to kind of spread the word rather than going from client to client. I decided to write a book and express a methodology that I feel I have, that I think if companies understood and would do themselves, they would need less consultants like myself to do it for them.
Love it. So many of us all have this message that we want to share and get out. And it's, a book and authoring a book is so rewarding once you get to it, right? I mean, it's
Yes,
it's quite arduous as you're going through it and
it's a
building it out,
serious
but yeah.
undertaking.
But yeah, that's great. Congratulations
Thank you.
on your book. That's fantastic. So, okay, here's a burning question. Probably means nothing to anybody in here, but why the word svelte?
So svelte, if people, because a lot of people don't know that what that word means. It means lean and attractive, and I think that's a big important aspect of a company that makes it successful. Because if you are lean and operation, and you'll operate more efficiently. And even if you're an attractive company, you'd be surprised on how that helps with costs. If you're an attractive company, you don't have to pay your employees extra to come work for you because they're going to be overworked and not very happy. They're going to want to be there, and you're not going to have to step up salaries to keep them there. And so I think being svelte is kind of key in order to try to have a philosophy for targeting your company to make it lean and attractive.
I love it. I love it. No, and it's so important. I'm a firm believer myself in everything that you do in your business should have a secondary reaction of making your company sale worthy, attractive. That exit is going to be there someday. Many of us, and I've said this a bazillion times, you're putting your blood, sweat, tears, nights, weekends, a whole lot of your savings and paychecks into your company, and the business owner doesn't often think about exit until it's too late. And so I love that you're starting and you're focusing in costs, and it always has that trickle effect to making the business more attractive, as you said. So I like that. I'm
Absolutely.
glad you're on the same side that I am. Okay, cool. So let's talk about different cost strategies. And maybe we'll start with the ugly, right? There's the good, the bad, and the ugly when it comes to costs. If we talk about the ugly, where are we looking to see our most expensive pieces in the company that maybe we can trim and lean out?
Well, and I think it goes a little bit beyond what most people associate with cost. Most people associate cost with kind of cash out the door, and that's the problem. And the truth
Mm,
is, costs have a much higher consequence than that. It creates a bloat in the organization, and that stifles innovation. A bloated company doesn't work with its customers particularly well. It's not healthy for its employees, and so there are a lot of consequences to an inefficient company that is wasteful and has some cost issues. And so I always try to explain to people, we're not doing this just to save money, just to increase the profits. We're doing this to make it a higher performance company, that for whatever reason, whether you want to exit, or you just want to be successful, and grow the company. It helps in all cases.
yeah, you're so on point with that. Nobody really thinks about the lean part, the
Mm.
agility of the company,
Yep,
that you can maneuver and do things a little bit easier when you're not carrying all this extra weight with you. You can take
absolutely.
advantage of opportunities. There's all sorts of stuff. But if you're bloated, and I like the way it's very, very visual, right? When you're
Yep.
bloated with things and expenses and maybe extra people, describe that a little bit more when you mean bloating.
So, and I'll give you an example that just comes to mind as you're speaking there, that I think relates to that bloating. Let's say that you're a small startup company and you have a small handful of people that are doing innovation and development of your product and service. And that if you took that same group, if you got acquired and you went and buy one of the large companies, and that same group was now added to the behemoth company, and even if it was flooded with additional capital in order to accelerate its innovation and product development, it would perform worse because
Mm.
it's that lean aspect of it that brings out innovation in people. So if you're an entrepreneur and you feel like you have to start throwing money at a group in order to try to make it perform, I think that's problematic. So the,
Mm.
it so that anytime you're going to create that bloat, and I think what happens is that employees start building silos. You start having more layers of management that hurts communication, and eventually that innovation gets impacted, customer service gets impacted, and I think you end up having a company that just isn't what you envisioned when you started building it.
Exactly. Oftentimes that's what happens, right? You
Mm.
you have this vision and dream when you start your company, you have this passion and desire because you can do something or create something or innovate something, and then you get into business and the weight of the business just holds you down
Yep.
and stops you from being what you originally desired. Which is sad, but I like to bring that out in my clients to kind of get them back to that. Oh, why did we do this? And what are we doing here for it? But yeah, that's a whole nother story. So
I'll
back
give
on
you,
costs, when we talk
sure.
about bloat, you quoted something off camera last time we spoke, and I thought it was really, really important. You said something about putting more costs. You can't outgrow the problems, right? You can't throw money and outgrow the problems. Tell me a little bit more about that because you just alluded to it in your previous answer.
And I see it a lot when companies are flush with funding, like they either do a round of a capital raise or an IPO. And it's interesting is that first thing they do is they start flooding the different departments with money, thinking that that is what's going to accelerate their plan. And it even happens on a smaller scale year to year, where one of their head of a department comes and says, "Well, I need X, Y, and Z for all these different projects," and you want to be empowering and you want to tell that you want to be the yes leader and give them whatever they want, and it becomes almost this methodology of appeasement. And what ends up happening is that these leaders are not able to deliver
Mm,
on what they promised they would try to accomplish. It is not even being very well tracked, so they're not even held accountable for that.
mm.
And the cycle starts to continue because the next year you already have that in your budget as your baseline, that you need to continue these efforts that really weren't that successful to start with, and they just perpetuate themselves over year by year, and it grows and becomes a bigger and bigger issue.
Well, that's something really key that I think a lot of people in the business space don't look at is managing the initiatives that they're doing and at what point do they pull the plug on them? Because that's part of bloating, right? That's part of extra cost. You
Absolutely.
just you just said, "Hey, we budgeted for it for next quarter or next year, and maybe it didn't work." And do we keep funding or, throwing money on a sinking ship, or do we jump and shift and innovate in a different manner, right? How does one,
Exactly.
from the financial side, look at that and say, now I need to make a decision, right?
Yes, it's a great place to start is that financial individual that they should be tracking a project's performance or initiative's performance, and it's their responsibility to say what were the original goals of this initiative, what has been the result of this, and it doesn't necessarily mean you have to punish people that perform them, because you do want people not to fear taking risks, but you
Hmm.
also need to learn from those mistakes. If you assuming you make some, you learn from them, you adjust, and you improve. And if you do those things, then you end up having more and more projects that are going successful because you're tracking those success metrics, and essentially you end up with a company that's operating far more efficiently because of it.
Nice. Okay. So when you're looking at that, you're managing the KPIs, right? So the key
Sure.
performance indicators, and you've set some sort of parameter of objectives. In quarter one, we're going to meet X, right? So if we don't meet X, but maybe we were in the T phase, right? If we're running backwards from the alphabet, we didn't quite make it, but we're not that far off. So, what as a CFO and looking at costs and the efficiency and the leanness of the company, when do we start to analyze, hey, was this a good initiative or not?
Well, we decide that at the very beginning of the project. What are the milestones that we're going to try to accomplish? And it's not to say that every time you miss a milestone, you throw out the project. Of course not. You
Throw out the
definitely
baby.
you adjust and you grow. And sometimes you do find that this is not going the way we wanted to, and it doesn't appear to be changing course. What is going to be different and make us reach those next milestones? How are we going to accomplish that? And there are some circumstances where you look out ahead like that, and it looks like the pain is going to continue. And at some
Hmm.
point, you have to make the difficult decisions that say this isn't making sense to us, and we have to move on. It's a sunk cost. Yes, we invested a lot in this, but we've learned from that, and we're not going to continue to sink more good money after bad money.
Mm,
And then there's other circumstances where you do look out and you think, well, this still has a lot of promise. We're going to give it another X period of time to reach this level of milestone, and then we'll reevaluate. And
mm.
just set those early on so that it's not one of those that's just perpetually continuing and you don't really have that evaluation ever. And before you know it, the project's done. It didn't meet its goals and objectives, way over budget, and at the end you end up with a product that just isn't what you envisioned when you started it.
Great points. Really good points, Duane. Okay, so let's shift a little bit. We talked about some of the ugly stuff in there.
Sure.
Let's talk about some of the good stuff that maybe costs can actually help the company with growth.
Yep.
What are some of those costs or areas that maybe really are hidden, but really are gems?
I think what's important about that is that you don't. I'm not advocating starve the company of capital, right? That is not all. That is equally harmful, if not
Diet
more
forever.
harmful.
Be on a
Yeah.
diet.
Yes, that's right. That's right. You've got to get into a position there where it's the right balance. For example, if you're overstaffed and understaffed are equally damaging to the company, and
Mm,
so you have to find the right staffing levels that make sense for the company. And there's a lot of things that you can do that are positive for costs that for the company, like being a more attractive company. And then people, whenever I say that, they kind of look at me strange. How do you make your company more attractive, or what's that mean? And that means it's a place where your employees want to work. And when you're
mm,
an attractive company, you don't have to pay your employees exorbitant amount just to come work there because they're miserable. No, they're happy to come to work. In fact, for every job you put out, you get a lot of resumes and a lot of good quality candidates because you are creating an exciting environment that has a decent work-life balance, that maybe gives out equity to the employees, has great leadership. And because you're a more attractive company that people want to work at, it's actually a cost savings type of effort. So you can, by spending money, and you really, and a lot of that is not necessarily spending a lot of money to do. Those are initiatives. Those are that's a management style. Those are aspects that don't have to cost a lot of money to make yourself an attractive company. And then the rest is just about finding the right balance between spending what you need to spend in order to be effective and not trying to flood money and not trying to starve an organization. And that goes by department. Where I always watch and where I'm most careful where I tread innovation. When new product development, I'm careful when I go over there because you can really stifle a company's future if you try to get too tough on that. Customer service, of course I'm going to go in there. I'm going to make sure we have good, strong metrics to know that's happening and we're not getting carried away. But I think that's one of the last areas you want to try to attack and save money. Anything that touches the customer and touches the future of your product development, I'm always a little cautious about.
Are your podcast guest appearances leading to real business, or are you just hoping that listeners will take action? With the Profit Booster Podcast Monetization Hub, we turn your interviews into lead generating machines so that you capture, nurture, and convert listeners into paying clients. So stop leaving money on the table and get started today at profitboosterpod.com. Love it. So where are some of the places you look first, right? You just told me where are the cautious sides that you don't
Yes.
always look first. Where's the first place you go in and look for those leaky profits?
Well, I'm going to start big picture and then I'll drill down a little bit there. Big picture in there is I try to look at what has caused, why did they call? They called me and they were having a problem. And a lot of times, yes, there's costs and waste and issues that I can absolutely examine, but a lot of times it's the management team, what you have some fundamental issues that even if I fix those problems are going to continue. And there are things like where you have a lot of entrepreneurs that are visionaries and the problem is they love other visionaries and they hire a whole management team of visionaries and you don't have enough doers that can execute. And as a result, it creates these cost issues that also that are a symptom of that larger problem. And so I kind of look big picture and then I drill down and I say, well, where am I going to, once I make sure I understand the core problem, and we talk very openly about that, and we try to figure out how we're going to fix that level of problem. And then I start to try to drill down. I get into things like the culture of cost awareness. What is are your employees really aware that they're supposed to be managing costs and watching costs? Most companies live paycheck, most employees live paycheck to paycheck. And so they're not necessarily great at spending their own money, much less the company's money. And so you help train and create a culture better of cost awareness.
Mm.
And then, so at this point, now I'm starting to drill down into the actual cost areas where I start looking at, usually love to look at G&A because kind of no one misses G&A, general administrative type of work, that you can go after that all day long and you can save a lot of money there. And then you kind of build up momentum. And a lot of times the leadership knows where they're weak. I don't have to say, hey, I should look here and there. Many times they say, we know where we've ate at the technology smorgasbord. And so how can you help us rationalize that a little bit?
So when you're looking at rationalization and actually implementation of strategies that you do, are you looking at like cutting? Do you renegotiate? What are some of the tactics that you would use to cut costs once you recognize them?
Well, we're trying to run metrics to find out what is the problem. And sometimes it can be overstaffing, it can be even understaffing. It can be that our vendors have gotten out of control because we were understaffed, and
Mm,
and now all that core knowledge is with a bunch of consultants instead of being with key employees on the inside. So you kind of have to customize in each circumstances on where your opportunities are. I'll say it is very common that there are products and services that the company buys from vendors that they're not managing well. Whenever
mm,
they originally got the product, maybe they were managing at that time. Once they're getting in the door and it's past their initial buying and parameters and what they needed, they don't watch it again. And so
mm,
it gets out of control. I've walked into situations where they weren't using 50% of the product that they were buying. Is it like a software that the licenses they had, they didn't need nearly that many, and you have to go
mm,
back and try to negotiate with the vendor in order to try to address that. Other circumstances where we moved work that was being done by consultants for half the price, we hired employees, and that way they were able to retain their intellectual property among their own employees and more trained leaders that were going to be ahead of training consultants. So it depend. I do try to customize depending on
sure.
each individual company usually has unique issues that I try to attack.
Wow. And okay, so you've given us a lot of really cool ideas on where to look and what to happen, and I'm hearing a common theme of, the people, right? Because that's your number one expense
Absolutely.
in many companies is the people that you have on there. And then, trying to make sure that you're balancing those between having too much or too little and making sure that you're in that right kind of sweet spot.
Yes.
For me, it sounds like today's everyday business owners can't handle this themselves, right? They're busy running around chasing customers and putting out fires that they don't really have the time or the skill set to really look deeply at what they're doing and let alone monitor it and
Mhm.
make decisions on moving forward. Is this normally a key position in their company, or is it outsourced to someone like yourself? Where does a business owner look for this kind of support?
Well, in many cases, it's actually not within the company, and that's what I'm advocating for now. I'm advocating
Mm,
that companies establish what I call a cost management center, where just like they have a revenue center, a head of sales or sales department, they also have a cost management center that watches their costs for them and gives the leadership and the owner very clear data that doesn't bog them down. It just identifies what are the problems as they come up and doesn't and you don't flood them with reports and try to pull them into the problem. How can they make quick decisions and understand what's going on and how are you going to solve them?
right.
So I try to I try to work on that a little bit there, and then sorry, I lost my train of thought a little bit there. I Can you remind me what we were talking about? I
Sure,
had
sure, sure.
something.
We're talking about ways that do you hire somebody outside? It's too much,
Yes,
as you
I'm
alluded
sorry
to
about that.
then when you're talking about, do I give them more reports that make them part of the problem and bog them down, or
Yes,
do I hire outside? You mentioned a cost center that cost center management, which sounds really, really valuable to have
yes.
someone to be able to oversee that part of the company. And does it happen inside or outside? What is your recommendation?
So my recommendation is actually to set up a cost management center, just like you have that Salesforce that is also their center, and it's kind of the counterbalance to the sales group. And with that, they focus on making sure that you have good cost management and that you're getting you the reports that you need in order to run the business efficiently and effectively, and make sure that you're not letting costs slowly get out of control. And they have to have honest and good relationships with all the different departments. They shouldn't just be with the owner. And if they're doing their job right, it's a very positive relationship. And when you think of a cost management center as kind of this ogre and oversight, and it's really not that at all.
Okay. So then do we hire somebody internally for that or externally for that? Because I'm kind of like sitting on the fence. If they're internally, then they really get their hands dirty, they get involved, they can build those deep relationships. But it sounds like if it's externally, then you've got a set of unbiased eyes that says, "Hey, here's where we can go and be better on it."
I prefer internal, and
Okay.
that's coming from someone who's always been external, or not always, but predominantly. And the
Right.
problem is that what happens is that when I leave many companies, it deteriorates. It's amazing how quickly. In 2, 3 months, all the problems start up again,
Mm.
and then in 2 or 3 years, I could come back in and do the whole exercise all over again. And now, but if you've you empowered your employees to do that for themselves, and hopefully you won't unwind like that. So I'm trying to
Mm.
teach companies how to fish rather than give them the fish these days. That's kind of my new effort.
I like that though, because that's where I was thinking. I was going back and forth. I'm like, do we want external, right, with that unbiased eyes, or do we want somebody internal that builds the relationship, trains and retrains the departments to be cost conscious, right? And then go back through and be able to have those relationships and they're in there every day because this is an everyday activity, not not a once in a while, let me come in every quarter and kind of clean it up for you. And then you go back and I'm cleaning it up again next quarter and cleaning it up again third quarter, right? It just seems more logical that way. So I'm glad, and listeners, this is an amazing awareness from somebody who works on the outside and says that you should have somebody on the inside. I mean, to me, that really
Absolutely.
lends incredible value. But to get that person in there, we probably need someone like you to come in and train and set up and establish the ground rules and make sure everybody's on the same playing card, right?
It is common that I go in and I help set them up if they can. It depends a little bit on the skill set they have.
Sure.
And what's interesting about it is a lot of finance, they come up through accounting or they come
I
up
was
through
gonna say.
budgeting, and they don't necessarily know what it means to manage costs. It's not just because you have a finance background doesn't mean it's some sort of instinct on how to do that. It's kind of
Of course
so I
not. We're
that's
probably the worst
right,
in
right.
our own spending in that
Yes.
in that forecast. But yeah, that's really interesting to find that right candidate for that cost center, right? You want somebody that has financial skills, but you also want somebody that has street smarts that's going to come in and go, oh, well, it's not just because we all know, accountants look at the day to day. Let me balance this plus minus that. The columns all have to match and end up at zero, right? Or you've got the accountant that's or the tax person that's looking in the reverse, or you've got the CFO who's looking forward. You have to have a blend of all three of those to manage your cost center, right?
Right, that's correct. And I guess I've tried to manage through my cost centers by trying to pull in the best of all groups and the best of all classes. And it really, if it, just like I try to preach that an organization should have a well-rounded management team that has a lot of different aspects of it. It's even true at the cost management center. You can't be single dimensional in your approach and thought process. So you absolutely have to kind of reach out to the organization, combine efforts, and have a broad range of skills. It's a difficult skill to find. You have to find
Mm.
people that are able to manage a lot of different things at once, but know how to deal with people, know how to be compassionate, and know how to be when to be tough. So it's a very difficult skill balance.
Ah, but super, super impactful and important for any business. So let me ask you one more question before we kind of put a bow tie on this here. When we're looking at the cost center and we're looking at the entrepreneur or the smaller business, right? That's, already in momentum, striving to multi-million dollar growth, maybe, not enterprise level at all, but in that small space, when do we want to pull a trigger on that cost person or get somebody to that's already in the financial side to start managing costs for the company? Like I'm thinking it shouldn't be on the owner's shoulders, right?
That's correct, and it doesn't necessarily have to be start with a cost management leader right at day one. But you should have a group then or a team that's part of that process. If you're spending money from day one, then you ought to have someone watching your costs from day one. And so as
Mm,
soon as practical, you should have that team that is responsible for the spending, whether it's someone in purchasing, it might be someone who's in the real estate managing your real estate costs, just making sure they get together as a team and figure out how they are collectively matching costs, how they are keeping each other accountable. Eventually, you get to the part where you have a leader and a department and a group that does that. But at first, it can be a side projects of individual roles for a small organization. But it should be part of the organization as they grow. It gets more and more mature.
I love it. And what better way to get the person that's spending the money to be aware of those costs and to
Yep.
come back to you and say, hey, I noticed we're spending here instead of always asking for more, but maybe going, hey, here's a solution to the problem that, I'm suggesting. So I'm a fan of because I think that adds more to the person that's taking that role on to have responsibilities like that they start to think like an owner. And it adds tremendous value back to the company. But how often should we be looking at this stuff? I mean, are we talking quarterly, monthly? How often should we?
I would argue it's a real time constant
Mhm.
effort. It's not I think you might put out quarterly or monthly reports just showing what you've done, showing your progress, but that's more of a communication to management. The idea of cost management is anytime you're going to spend money and coming up that you are working on that. So that has to be happening, and then you're just doing the reporting on a quarterly basis or annual basis even, and different levels of communication as needed. But anytime you're going to spend money, you should be trying to look at how you're doing that, and are you doing that wisely? Maybe some of
Mm.
the compensation and those type of things, those can be an annual review of how we're going to do raises this year or something like that. So you can kind of group that all at once. But for the most part, it's a constant effort.
Ah, I like it. Wow.
Yeah.
Duane, you've really given us some insights on cost management. And it's not just looking at the numbers. Oh, cut operations. Oh, cut cost of goods sold. Oh, cut labor, cut, real estate. It's a continuous thought process, as you just alluded to, that says every time you write a check or every time you put out a credit card or pay an expense, you logically think, can I make this better?
That's exactly right. You're watching as you go, and so there's no surprises, and that way you're much more apt to stop waste from slowly creeping in.
Love it. All right. So, Duane, where can listeners find out more about you, your book, ways that they can really start to look at managing the costs of running their business so that they can be more profitable, more nimble, more agile in business and, outperform?
Well, thank you. And they can find me at efficacygroup.com, and that's EFFICACY group.com. And on there, I offer some free consultation at the bottom of every page. It says book a free consultation. And I love talking to business owners about what's going on and try to help them. That not only is it free, but I enjoy it. So I encourage anyone that's interested in to go ahead and schedule some time. And I'm glad to talk to them.
I love it. As we evolve in our business careers, right? And we reach a certain time in our life, I'm a huge fan of giving back. So I appreciate that you do that as well. I think that's the way that um you add value, you provide an opportunity for somebody else, you lift those below you up so that they can be better. And having that kind of that mentorship and learning and giving first, and then they always want more, right? And then find you
Right.
from there. So I
So
appreciate
sounds good.
that.
Yes. Yes. Okay.
All right. Well, thanks for tuning in today. I hope you picked up some valuable insight and actionable ideas that'll help you make your business more profitable. And I know that by looking at those costs and start to create that cost center mentality throughout the team that's actually spending the costs, I think would be a fantastic first step. And if you need help kind of laying that out and mapping it out and trying to figure out what to do, I think Duane would be a perfect resource for you on that. So I'd encourage you to reach out to him on that. All right, but before we go, if you're ready to bring more of the right clients and keep more of what you earn, go grab the free Profit Booster Growth Map. It pinpoints 3 top moves that are going to grow your revenue and stop those leaks fast. Go get yours anytime at profitbooster.biz. And while you're at it, don't forget to subscribe. You don't want to miss future shows. You can always find Profit with a Plan on any of your favorite podcast platforms. We're looking forward to more profitable strategies on next week's show. Until then, make your plans and profit with them. Thank you so much, Duane.